Good day, traders. Our next section is going to be talking about first red day. First red day. It's an expression many of you have heard me use. Today we're going to go into detail and really define what that is. We're going to go through some examples. Very important signal in our 5-day template. Can be a very important signal. And then we're going to be giving you some homework to be able to go and identify first red day and textbook perfect first red days. So there's a misconception out there that first red day is just a down closing day. Now that is not correct. For my purposes, a first red day is not just looking for any red day. You want to see an instrument have gone up for 2 or 3 days at least in a row. Doesn't always have to, but that's an ideal sign that it could become overextended, or that, again, if we're looking for a 3-day setup, first red day can give us some valuable insight. The key that I look for with first red day is that it goes up, forms a peak formation. Now you'll notice that this particular day, and we're going to go and look at these examples in close-up. This is a Monday, day 1 is an up day. Day 2 is an up day, and it forms a peak formation, but closes as an up day. Day 3 doesn't quite take out day 2's high, but on Thursday they take out the high of Wednesday, but it auctions down and closes as a down day. Now the key here is that it went up first. Vertically took out the previous day's high. It formed a peak formation and then came down and came beneath volume. So what we want to see on a first red day, a textbook perfect first red day, like we saw on these previous days, except they closed back up as an up day, we want to see a first red day close down underneath a day that's formed a peak formation. If it sets up properly, it can be a scalable best trade setup. So not all first red days are going to be scalable best trade setups. They're potentially going to offer us good trades. And then there are going to be first red days that offer us fantastic scalable best trade setups. Different setups will offer different first red day trade opportunities. And it also may not set up. So it's important that just because we get the first red day does not mean that it will give us a best trade setup. If it sets up properly, it can be one of our best scalable trade setups. And in understanding that, sometimes it takes a couple of days after the first red day to actually set up for a large move. So what happens often is that traders find the first red day, they follow it the next day, it doesn't play out, and they forget about it and they go and follow other instruments, when in fact it may be falling over from a Wednesday into a Thursday, and again it may have something to do with news being on the calendar or the end of a month. They forget about it, and on Friday it drops 150 pips at the beginning of a session as a scalable best trade setup that had very small risk, maybe 15, 20 pips of risk for 150 pip or more trade. So very important day. This is a really important concept to grasp, because this will help to start to glue together the templates for traders to understand what they are actually looking for. So here's an example, first red day. Now we'll go and look at this on the chart. You can again see we've got multiple days of up counting days. We get our reset on the Monday. We'll talk about reset, but Monday, day 1, day 2, day 3, that's the one we looked at. Let's take a look on the chart. Now we'll just look at a few different examples, and we'll look at some examples of traps where traders can get caught thinking they found a first red day, and then the market continues to go back against them the next day. Often on a first red day, the market may still come back and retest a level, but ideally what we want to see is a market that's come up for 2 or 3 days. So again, this is our Tuesday. We start our week day 1. We'll put this on here. So just again, keep getting in the habit. If you ever get stuck or you're confused or you're following, other indicators and whatever, and this market always is easy to start from and just say Monday is day 1, day 2, day 3. On day 4, the market goes vertical. Now, there may have been news this day, I don't know, but we come to the screen the next day, the next morning, depending on where you're at in the globe. It could be that evening, but we have a first red day on the close of this day. Now, again, we've had a couple of days of bullish closes and a vertical move, and then the market closed below the open, and also after going vertical and making a peak formation. So we have volume caught up high, we have traders caught up high, but more importantly, what we want to know is that the next day, if this gives us any sort of opportunity in one of the 3 sessions, in terms of it's a selling signal. And so our first target in most instances will be the low of the previous day, and then potentially even the low of the week. So when we follow this market across, just in terms of expediency, we're going to be looking for sell signals at the beginning of the session timing. So again, not sitting at the screen for hours. We're looking for sell signals at the session timings. So in Asia, we would expect a pop-up if this was a market that was going to give us a sell signal. We didn't get that, but we got a sell signal in the Europe-London window. Now, we'll go more in depth into this about the session timings and the actual entries. So, for example, traders in Asia may have been looking to short this, but there is no real sell signal. If anything, you can see there's a short squeeze getting traders trapped long, thinking this is a short squeeze, and then the sell-off. And the key is understanding of where traders are trapped. So you're going to hear me use this phrase, trapped volume. We're going to start to identify that as well in our upcoming lessons. But we're looking for volume to be caught up above that level where the close was. So again, we have peak formation, we have volume caught, and this is a key thing to understand. We want traders to be caught on the wrong side in order for us to be getting that successful best trade setup. So again, there's a sell signal in the Europe-London window, a sell signal in the U.S. New York Open window for a move back down. So again, we'll talk more about levels and risk reward in the upcoming videos. For now, I'm just focusing on getting the concept of first red day. So in your homework, we're going to be talking about you going through 4 or 5 different instruments and seeing if you can find 5 or 6 textbook perfect first red day examples, peak formation, close below the open, trap volume after 2 or 3 days of an up market. And then just follow them to see how they play out, because you'll find, again, there's a day 1 Asia sell high setup. That's 2 days later. But again, that the move starts to go the day after on first red day, but on the Monday continues and gives an Asian session short, a Europe Open session short. But as we follow that through, in some cases, we'll see this continue for a day 2 sell in Europe. And there are continuations, a day 3 sell in the Europe and US session windows for potential larger capitulation style moves. So again, an ideal setup is to see a market having come out of a 2 or 3 day up cycle, bullish days, a day that goes vertical first. So it goes up and puts a peak formation in first. What that indicates is that the market has gone up, could be trapping more longs, but it's run out of juice. There's been some kind of reason for that to reverse, but it reverses and trades underneath a level and potentially may do that again. We want to know that there's volume trapped on the wrong side of this first red day. In another example, we have a Friday and then a Monday peak formation before dropping and closing. So not a first red day, we have a half Batman formation. And then on the day 2, Tuesday, the market drops down, continues to auction back and forth, but closes as a first red day. So an example of where this has occurred over a 3-day setup, the peak formation was put in on a Monday, and again closes below on the Tuesday. Sometimes you'll see a news catalyst. We see the Fed, and again we'll go on to blow up the bigger charts to see these, but I just want you to get the understanding of markets that reverse, closing as a first red day. At the end of the week, heading into the new week now, we can see potentially a best trade setup candidate either on the Monday or Tuesday, and we have volume all caught. Again, being able to look at the close and reference above that on a first red day if we have traders caught on the wrong side if this market was to potentially capitulate down. Again, another example, Monday, Tuesday, peak formation on the Tuesday, first red day, volume caught above, the market's gone vertical and then reversed. We'll look at this example on oil in a second. We had 3 days of rise, 3 days of bullish closes, and then closing on the Wednesday as a first red day. So when we zoom out, we see the first red day, and that's our trigger for the next day for looking, depending on what session you're trading, Asia, London, New York, or all three, where we can get trades into the sessions themselves. So we had our first red day. I've just gone down to our 15-minute chart with our colored boxes just to demonstrate the session timing. So again, traders, these are all about identifying the best trade setups for the sessions, not sitting at a screen trying to decide where to get in, where the trade is, all of those things. These are specific to timings. And with the first red day opportunity, 3 peaks is one of the setups that we'll be looking at on a day 2 and a day 3 trade, which means it's 90% of the time a U.S. session trade. But this trade, to put things into perspective about trading little moves in the market versus a best trade setup, this trade is in the area of a 400 pip move, and that's over in less than 2 hours, and no more risk than 25 pips on the trade. So we'll be talking about these types of setups, but again, the catalyst, the trigger for us to even be looking at this market on this particular day was the first red day setup. We can look at any instrument. This is from the NASDAQ. We'll look at this in a second. I want to just really emphasize the importance of learning and studying the first red day, because this one trade setup alone will more than be enough. Just having knowledge of the first red day setup by itself is enough for you to have consistently scalable best trade setups. So we see our first red day setup. We have a market that's come up for 3 days, gone vertical, put in a peak formation first before closing as a first red day. That's our trigger day. So that's us getting the awareness that we've just had a first red day setup. And then especially with an American market, the NASDAQ, New York session is our main focus. We have our low of the day, and we have our high of the day, and we have our New York session sell high opportunity after our first red day, after 3 days of rise. These trade setups are potentially huge runners, huge opportunities. If you can master this setup, as I said, this can be a powerful best trade setup. We go down to our smaller time frames when we have our thesis in place, and then we have our execution plan in place. These are the types of setups that offer us 5 to 10 times our reward to risk ratio when we can identify them and some of these larger markets, the indexes, oil, commodities, and sometimes the currencies as well, they will offer us significant opportunities on a first red day setup. So for homework, I want you to go through 4 or 5 different instruments, try and mark off at least best 5 first red day setups on each pair. So obviously just marking them off, recognizing them. Don't worry about what happens after them. Just for now, get in the expertise of being able to identify a first red day. So again, coming back to just the simple concepts that we've covered so far, starting day 1 Monday, day 2 Tuesday, day 3 Wednesday, and then looking at if a market has had 3 days of rise. If it's making new highs, then potentially we're looking at a sell setup. Obviously, we're not talking about trending markets. We'll talk about the difference in terms of how that price action will be versus a market that is going into a pump and dump or a sell 3 days of rise sell opportunity. So just mark those off, then follow through after the first red day just to see how that instrument traded out. Notice the days of the week again. So as that market trades out, again, was it on a Friday? Was it on a Wednesday? Was it at the high of the week? Did it actually break down afterwards, or did they put in a low and resume the upward movement? And then when it did finally, if it did give a great trade, which session did it occur in? So again, just reinforcing that sometimes these best trade setups may complete their pattern, but not in your session. And just a reminder that you're not going to get every single trade, but it's about mastering the process and the trade setup, because you're going to get best trade setups in your session over and over and over again. So if one doesn't set up properly to be, completing the pattern or blowing off in your particular session, don't get fixated on chasing it or following it, because if it's not ready to complete that pattern, it may not be the ideal candidate, and it also may not be completely ready to. If it doesn't go in your session, it's not going. Chasing it won't help. Not a good habit to get into. When these trades are ready to go, they will go in the session timing. So when they're set up properly and it is a best trade setup, they move, and they move very strongly. So do that for your homework. And in the next session, we're going to talk about the first green day. Thanks, traders.